Good morning, Paul Georgie from Allendale. It's July 12th, Thursday morning. We just got the USDA weekly export sales. Corn came in at 665,000 metric ton. The trade was looking for 250 to 425. Soybeans 759. That was a trade estimate 375 to 650. So above trade estimates on both corn and soybeans. Wheat at the low end of the range, 312,000 tons. 350 to 500 was the estimate there. Markets did not react a whole lot from that as the markets are open here this morning. But the focus again is, and the question that have been asked in the last 24 hours here is the weather market over? Probably not, although there is some more rain in the forecast, better chances of rain, I should say, for most of the Midwest this weekend, starting late Saturday, Sunday, Monday, and Tuesday. So if that develops, maybe the weather market is over. But at this point, we are going to wait to see that we get rain before you can say that this excitement is over. And the reason many are asking is the volatility that we've seen yesterday. We had a USDA report that showed that we're going to have extremely tight supplies. The yield drop in corn was whopping 20 bushel per acre. So those factors should have maintained a strong market, and yet we did not see that. We closed lower and had a huge range. Many technical traders are looking at the action yesterday and saying it's a key reversal with making new contract highs and closing lower. However, it takes a little bit away from that typical technical action, and that open interest actually increased yesterday in corn and soybeans on this kind of a volatile day. So the markets are stronger this morning. Again, we still have very tight supplies. You've got a lot of analysts already reducing the corn yield below what the USDA had yesterday. Some dropped it to 143. There's others still looking at below 140 as a possibility. So, and when you throw those numbers in the mix and you don't change demand, some are calling for a negative carryover, which is very unlikely. So there's adjustments being made, and still bullishness out there until we get some kind of drought-breaking rain. In the outside markets, dollar a little stronger. Expect volatility to continue there as well. The focus that the outside markets had and the impact they've had on the grains here the last few days has been minimal, but continue to monitor that very closely as the expectations are that we could see funds come in and buy this thing. Well, there's enough chaos going on the macro side of this market that we don't think that that's likely at this time. In the livestock complex, beef cutout values continue to deteriorate, and that's not unusual for this time of year. We're going into a time period here where it's called the dog days of summer, where demand usually slows. A lot of vacations, less higher heat, and less consumption of meat, and that's typical during this period of time. So we've got to deal with that, but we do have tighter supplies of pork and beef. The heat has caused some reduction there, and balancing out that negativity at this time. The livestock markets got a little support yesterday from weaker grains, but the opposite happening here this morning when the grain markets are stronger. So being impacted by the agricultural complex is certainly being impacted by the fluctuating grain prices, and expect that to continue as we go into the weekend. If you got any questions, don't hesitate to give us a call. Reminding everybody also that we have the monthly Allendale Ag Leader webinar coming up on the 24th of July. Check out our website and get signed up for that. And if you got any questions, 800-262-7538, and we'll try to answer them for you. Wish everybody a very successful trading day, and we'll talk to you tomorrow morning.